how smart is a company being with its assets, right? That's useful to know too. We'll say Costco has $45 billion in assets. 45 billion, that's huge. Well, how much money are they making with those assets? And so we can take what they're saying here is our net income divided by average total assets, right? Just showing you where it's all coming from. So what's our average total assets? Well, we just take these two and divide it by 2. So 45,400 plus 4830 divided by 2. So their average assets is, let's say, 43 billion. And then we just take our net income. I'll just round, right? 3,600 divided by 45 billion. We're getting about 8% return. So that means that if you're investing in Costco, you get about an 8% return. Every dollar that they invest in their assets, they buy a store, they're going to likely generate an 8% return from that dollar that they spent. Right? So that seems pretty strong. That's better than they'd get by getting a lot of investments. So investing in themselves, they're able to get an 8% return. That seems like a strong return. Let's see how that compares then to Walmart. Walmart has total assets of, these numbers are so outrageous to me, 240 billion. 236,495 plus 219,295. We're going to divide it by 2 to find their average. So let's say 228 billion total assets. Net income. So we're going to say, let's say 15 billion divided by the 228 to round. 228. They get a lower return, right? So for their assets that they invest. So what is that telling us? It's telling us that Costco is doing better from asset management standpoint than Walmart. Walmart might be more profitable in their everyday daily business, but Walmart also has to spend more on assets in order to generate a lower income, a lower return based on their assets. And so that's interesting. So Walmart's model, it's a higher, more asset intensive. And if we go and think about how this makes sense for businesses, right? If I go into a Costco, there's kind of a premium, there's less of a premium experience there, right? It's really bare bones. There's no shelves. It's a warehouse that you go through that's just has standard lighting, right? But you go to a Walmart, generally it tries to be a nicer experience. The floors are a little nicer. You have TVs lining the stands. You have a lot more happening within a store, a lot more painting. It's a lot less bare bones. So it makes sense that they have to spend more on their assets to maintain their brand. So this is where we can learn about how a company's managing its assets. And then we can compare what's a better investment, right? So from that standpoint, like maybe Costco looks more attractive. But at the end of the day, right, and which we're going to talk about as a team, at the end is, well, what's the price for the investment? And that's something we're going to use called the price earnings ratio, which